Hey, everybody, good afternoon and welcome to 12 Minute Trading. Today is Monday, the 27th of October, and I'm joined by Dave Lukas over here of 12 Minute Trading. My name is Doc Severson, and we are going to walk through what we see happening in the live market. It's been an unusual year, let's put it that way. We started off the year with a little bit of volatility, and then all of a sudden a lot of volatility as we got into our tariff tantrum. And we really recently had, after 30+% rally, we recently had a little micro tariff tantrum, but that has all been wiped out, especially with what's happened this weekend. So, Dave, what do you think? Are we going to run into the end of the year?
I think I'm a broken record saying that we're going to do that on these weekly sessions, right? So,
Yeah.
historically, seasonality, if you follow that, typically markets actually bottom today, the 27th, and then you typically rally through the end of the year in most years. So, it's shaping up to be like that. We've been tracking the market energy to be able to do so. We got charged up last week. We told you last week that the daily chart was ready to go, was probably going to go higher. That's what's happened. And so we've got that release on. We've got a weekly chart that's starting to go along with it. And I'll tell you, the Russell is just starting to get going. Out of all of them, it has the most potential to go the furthest and the most through the end of the year. There's a lot of pent up energy in that thing. It just has to play catch up. And the Fed Russell companies, right? They survive on debt. And so lowering the cost of that debt just fuels the Russell even more. We've got the what looks like some sort of tariff deal with China, or at least, we're kicking the can down the road from having any issues, right, on November 1st. So that's now taken off the table. Yeah, I mean, just like it's set up right now to go and do the end of the year rally. Now, we do have uh, this government shutdown that is sitting out there, and we've made it through, and the market hasn't paid too much attention to it yet. But starting really next week and the end of this week and into Thanksgiving is when we're going to start to really notice some of these things that this thing prolongs, because there's been some things being done to get people paid, but this week is really the first when it really starts where nobody's getting paid. Air traffic controllers, all of that type of stuff are really going to start not having, checks come in or any of that stuff. So, that's where things could, if that goes on, much, for another month or so, which will be the longest in history, you may see the market start to, if it starts to affect the economy, start to price some in around that. But again, if you get a breakthrough and there's some sort of agreement, you just that'll just fuel this thing even further, which is probably more likely, as it only requires a few of the Democrats to come across at this point to do it. So we'll see. But that's right now. It's looking up. Is what we're
Yeah,
looking
it's
like.
too bad there's nothing else happening this week, too.
Yeah.
Um, you know, speak,
Earnings.
we have I think it's 43% of the S&P
Yeah.
500 is reporting this week, and that includes some major Mag 7s like Apple and Amazon and Microsoft, Meta, right? So
Yeah.
we've already done Tesla, we have Nvidia yet to go. I
Mhm.
think Google is somewhere in there. Maybe it's
I
next
think it's
week.
this week too. You know, uh, it, over 85% of companies have beaten earnings this quarter so far. I don't see that not happening with these guys as well. So I think the earnings are going to be pretty good overall, and that goes right into the Fed cutting rates, So I think
Right,
this week's a
right,
pretty
which is
positive week.
also, yeah. So Wednesday and Thursday are going to just be peak insanity because
Yeah,
of the. So I mean, everybody knows the Powell administration's done a pretty good job of telegraphing what they're going to do.
right.
There's none of this Alan Greenspan sort of coyness about what they intend to do. However, what I've noticed about Powell is that he will take an action and then he'll get on the podium afterwards and almost completely negate that or
Yeah,
obfuscate what he just did and
yeah.
throw some indecision on it. So you never know what he's going to say when it comes out to the podium stuff.
And who knows? He's down to the last few meetings of his tenure too. So,
Yeah.
is he just checked out at this point and moving on? I don't know. We'll find out. But I imagine coming to the end of the year, we're probably going to get down to some probably finalists being floated out there. They'll probably get serious about putting out some names. So that should be
And
interesting
I
too.
think they're going to have like wing sockets, you know, bolted into there so that they can, be dovish. I mean,
Serious dove wings. Yeah.
yeah, it's. I mean, it's almost. We are seeing, like you say, the end of things, the end of times when it comes to fiat. Let's.
Yeah,
I'm gonna.
fiat. I mean, fiat is this is all this, guys. I mean, this is just you're just watching the death of fiat is what you're what you're watching, and it's just coming in the form of really inflation, right, man? I think, gosh, what was it? A couple of years ago, we were on here. For those of you that have been watching that long, I think I said that that 2% target by the Fed they're never going to adhere to that again. And now it's like, hey, 3% is good enough. We can start cutting. Like you
Right.
don't hear anything about the 2% target anymore. You're probably never going to hear about that again. They're going to let inflation run, and assets and things with any value are going to continue to go up. Look at Japan. Japan Nikkei hit over 50,000, end of last week, and you look at I think they're buying half their bonds now. Their bank is. So half the bonds that Japan puts out, their bank is buying and monetizing. So, you know, 200 and whatever percent it is of debt to GDP. So,
Yeah.
that's what happens at that point.
There's
So,
your Nikkei. So
yeah.
the Nikkei is running into just. That's that's pretty impressive. Here's the S&P 500 that we're looking at today. So much
Mhm.
for our 5 and 10% haircut targets. Those are not going to be hit. At least not on this. So this turned out to be the bear trap, as usual for these things, and 3% appears to be enough of a pullback these days to energize the market. So what Dave was talking about on the S&P was this energy peak that we talked about last week, and said, hey, when we get into this level of energy, it cannot be contained. It's almost like trying to hold a live squirrel in your hands. It's going to go in some direction. You're not going to be able to hold it for very long, right? So it's going to go in one direction or another. And if you have to know which odds favor, you look at the longer term trend, and that's where things work out. Also, we have a fair amount of energy in the weekly chart. Now, we are
Yeah.
deathly low on energy on the monthly chart, but we can't time off of that. We can't time off of that. So,
And you can
um,
see times where the monthly chart was in exhaustion and it just continues to
yeah,
go
it just
higher.
kept on going. So, what we got into last year at the same time, we had the same type of energy deficiency on the monthly chart. And what we got was, instead of any kind of material pullback, we did get a 10% haircut from it, but it immediately was relieved. So it's just a lot of what I call shake and bake happen, which was, allowed the market to charge up again. And so, that's what we look at, guys. We look at markets are either in expansion or contraction. So if you're going to climb a mountain, you're not going to summit a mountain in one day, especially if it's something like 35,000 feet high. You're going to go through stages. You're going to go as far as you can, and then you're going to rest and recover and
Mhm.
build up that energy for the next lug, next push higher. And to some degree, it has to acclimate itself to the altitude, which is what's happening
Mhm.
right now with the S&P as well as other markets. It's getting
Yeah,
used to that altitude.
we're gonna see. I think we're gonna see 6,900 played with this week by the S&P. It's about 30, 40 points away with everything. I don't know if we can hold it. I think that is going to take the rest of the energy out. This is not that's the cash index, I
Yeah, the
should say.
cash
You're on the
index.
ES. But the SPX cash index.
Yeah,
I
that's
think you're going
that's
to
one day.
see. I mean, yeah, I think you're going to see that, probably through Wednesday at some point. Certainly by Thursday after the Fed and everything. But you contrast this, so you can see there's 42 on the energy, so it's got some ways to go. It can go down to 20s and 30s. It can get gold just came off the exhaustion. What we see the gold, I think with the weekly chart was down to like 8. So
Yep.
it can get pretty exhaustive if it wants to. But that weekly chart sitting there has got 40 some energy, so that's enough for 4 to 6 or more weeks. Yeah, there's gold. Finally, it's pulled back some and starting to charge that weekly chart. You can see that happening. So, uh, gold guys, I keep saying 330, 340. If GLD gets into there, that's probably a good level. You want to sell into that a little bit. But contrast, yeah, you pulled up the rut chart. Now look at the rut compared to like the S&P. And it's interesting because usually a lot of times the Russell will lead the rest of the market. It's kind of like that canary in the coal mine. But in this case, the S&P and the Nasdaq have led, and now the Russell is getting ready to go and catch up. So really interesting to kind of see this today, and you can kind of see where that energy on the daily chart is just starting to roll over, and the energy on the weekly chart's just starting to roll over. So there's definitely some good energy to take this thing through the end of the year higher.
I wish there was something that we could play on. Are you aware of any good Russell ETFs that we could play? So there's always the
Well,
IWM,
IWM is
but
probably the closest.
but
The-
you're gonna need just to play one contract. You're gonna need to have 20
Oh, you're
20
talking
some grand.
about yeah, you're talking about like Russell, like the SSO type for the Russell.
Yeah,
Russell, I will look it up for you real quick.
I have not played the Russell anytime recently, but so you
There's
could.
the MRUT. Check the MRUT. I remember playing that before. That's a cheaper version, but it's still probably
It's still $250. So
yeah, it's still probably pretty pricey.
so you could do something like this. What you could do is you could say, all right, where's a place
Do a
where I
buy
could.
right.
Yeah, well, you could do a buy right, or you could also do a modified synthetic long. This is
Mm.
some people call this a risk reversal, and you could say, all right, where's a level that I would be comfortable owning? And so maybe you say something like a 230. So we're going to go out to I'd say like 19 December here. We're going to give ourselves a little bit of time.
Hey Doc, a good one could be the Vanguard one, VTWO. That's like $100.
V2. Well, let me show on this one
Yeah,
first,
do
and
that, and
then
then we can.
we'll look at that. So we're going to analyze selling a single put on this. Let's try that again with meaning. Okay, so if we sell a single put, that's going to bring in, roughly $220. Now that gives us a budget that we could spend to buy a call option, and so we can now buy a 270 call. All right, so we've got these, and then what this allows us to do is that we've got this trade where we've got this whole area where, especially this area here, where we can't lose money. So if the price goes down to 230, we can then decide whether or not we want to be assigned on that pullback, or if it just goes down and nothing happens, we don't lose any money at all. But if it takes off, if we feel that this takes off, this runs with roughly the same velocity as 100 shares of stock, as if you had that long, without the downside of that having that stock long, which is great. So I've used this with a lot of our students. It allows you to speculate on something. The only problem here is that this is going to roughly cost you somewhere around 25 grand in margin. So this is not for the faint of heart, and not for a small account. So let's look at your, which one did you say?
VTWO, that's the Vanguard one. It's not going to have enough juice. Yeah, I see some people putting in TNA. TNA is a 3x bull though. So, I mean, if you're really bullish on the Russell, which, I mean, the energy show that you can be, then TNA for, $49, is you definitely have some more opportunity there. But VTWO just doesn't have the money and options. So if you look at the options chains.
Yeah. So first of all, your first clue on this is that there's no weeklies. Anytime there's an asset with no weekly options, that usually means that the monthly options are pretty terrible. And we can see this with the volume and open interest. There's basically nobody sitting on these strikes at all. And so this creates what's called a roach motel. You check into the trade, but you can't check out. And I've had that before recently with EETH. So I was trying to take a position in the Ethereum ETF, the futures-based Ethereum ETF. I got in, I sold the put, it worked out great, but I could not exit early until like the last couple of days. They keep the spread super wide on these things. So look at this, a buck 20 by 390. No
Not
bueno.
worth it.
Don't do it. Yeah. So VTWO. So we may not have a trade on the Russell, but if you have the capital, you could use the
Well, the
IWO.
TNA you can look at, and it's going to have a lot better options chains. It's a 3x bull, so you're at the
Oh,
mercy of,
yeah.
you got to get it right, you
Well,
know,
okay. So here's the thing, guys.
and you may run into liquidity
If
issues
you
on
do
the
anything
option.
more than 1.5x in terms of leverage, you cannot hold these things for long.
Yeah.
So the whole idea about selling a put for something is that you want to own it down the road someday. You want to own that thing, and you want the capital gains from it. The problem is the erosion will absolutely punish you. Notice how this thing is not kept up with, it from the peak
Yep.
here at 110. It is not kept up. So it's the standard asset, the underlying, the rut is back up to all-time highs, but this is not. So that's
Yep.
what that is what it will punish you. You can trade this short term with options, but it's for very short term holds, very short term option plays. Oh, we got some questions coming in. Hey, Boomer Dan. Hey, Brewhead. Um, would it be too perfect to have J Powell fill the gap on the 2017 parabolic move? Which one is that? Which gap is that?
Is it supposed to be 2017? Let's pull up the SPX and take a look real quick and see if it. That's a long time ago.
Well, we did have. I mean, we have been talking about how we could get a move similar to the end of 2017, beginning of
Oh,
2018.
yeah, now maybe that, but there's no gap that I could think of.
Yeah, so I don't know if we're going to get some kind of crazy move, and maybe this is what we're seeing right now. So, guys, don't get too complacent with what's happening here. If you are printing money to the upside, start to set up hedges to the downside. Find a way to set up an asymmetric reward to risk trade to the downside that will print if it drops. And it's not easy to do either. I mean, something I did, like I own some SLV, and about 2 weeks ago I said, hey, let me buy some out of the money puts here for it. I thought that if there was going to be a move to the downside, it was going to be by the options expiration in November. And I got that right. However, my trade's still underwater. It's still underwater. So just because you're buying puts out of the money and you time it right does not necessarily mean that time decay thing is a real mother. So it is tough to hedge to the downside. So the way that we typically do something like that is with like verticals.
Mm-hmm.
So buying some out of the money verticals, or if you're willing to put more capital into something with a lower payoff, you can do at the money verticals. But you're only looking for a 1-to-1 payoff on something like that. So it's not going to give you that sort of bang for the buck. But yeah, like waiting for something where it just eats it. And that's the thing is like I've come up with hedging strategies through the years, and all I end up doing is throwing money out the table. You just throw it out the door, no matter what you do. And
Just
then,
remember Peter Lynch's famous quote, right? Far more money has been lost by investors trying to anticipate corrections than lost in corrections themselves.
right, right, right.
You
So,
know, I mean, just for reference, pull up a all-time chart of the S&P 500 and look and see what it is. It's up and to the right, and that's again because you're seeing the death of fiat currency over time. But that's the historical bias.
something else, Dave, that's really nuts is if you look at the fear and greed index,
Yeah.
Whatever you think about CNN, the fear and greed index is at least one barometer that we have out there.
Hmm.
And we were in fear or extreme fear over the
Two,
last
two,
week.
2% drop, and we're extreme fear.
Extreme fear. We're right up within the sniffing at the all-time highs, and we had a market in fear. And this is the classic case of climbing the wall of worry.
Yep.
This is what markets do.
I think you need I think you're going to get a blow off top from this move. I think that's what's going to happen. That's just my, again, we can't ever predict that. Who knows? I just, being around, I just think this thing is going to just go parabolic and suck everybody in, and then it's going to be really ugly.
And what we're going to have to do through that is if we do get that move, and maybe it started on Friday, with
Yeah.
this breakout, is that you've got to ladder in insurance. So here I am. I'm saying 2 minutes ago, I'm saying like none of my hedges work, but you've still got to do it. You've still
Yeah.
got to find ways to do it because if you take this thing all the way long, 100% long, and if you don't take profits on the way up, you're going to be, it's like balancing a very heavy weight at the top
Mhm.
of a long, skinny pole. And it can be done, but if you have the slightest little bit of vibration or wind or anything, that whole thing will just come crashing down. And it's happened to us far
Mhm.
more often than we'd like to admit publicly here. That we've watched really good gains just disappear in literally
Yep.
days
Yep.
through some of these moves, like whether it's 2008 or what are some of the other good ones that we've had? Certainly, 2022 was a lot of
Hmm.
fun.
Yep.
We've had our moments in 2015, 2016. Various crashes along the way. We had the flash crash in 2010, where we dropped like
And
10% in one day.
there's other ways to do it, but yeah, like sometimes they just it's you can't do anything with the like a gap overnight. So like one easy way to hedge is just to set up like and set your limit actually. Like if I sell a low probability or a high probability trade, so far out of the money, maybe a 5 to 10% return on risk trade, right? Something that's like a 90 delta, or not a 90 delta, but a 10 delta, 90% chance of making money, right? Um, Historically, you can do those, just continue putting them on, putting them on, putting them on, and making money until the one time it goes against you and it takes out all the profits for the last 3 or 4 months. So one of the things that I've gone to over the years where that does work is like a 3x static risk, right? So anytime a trade like that hits 3x the credit that I originally got, right? Which means I'm losing two times, two trades basically. I exit and I'm done. Let things settle down, then get back to it. But there have been times where it's just the gap is so big and the selling so ferocious overnight into the day, you blow right through that, right? You just got to deal with it. Maybe you're 5x and you're out, right? So like there's no perfect solution for this. There ever is for these, when these things really do go off the rails. And they usually come out of nowhere when nobody's expecting it, right? And so that's why what Doc's saying is important. You gotta kind of have this like healthy paranoia as a trader, and that's why stocks do climb the wall of worry. But if you're making money and you're hedging a little bit, making money, hedging a little bit, and you're continuing to make a lot of money, you know, get some hedges on. It doesn't, it won't hurt. But that like a 3x rule is a great rule to have, for if things start to go sideways, you can usually get out for most things pretty easy with that and save yourself a lot of heartache,
Early
headache.
early on in my career, I was delusional enough to think that I could spot where a market would turn and reverse. And the
Yeah.
trouble is with that. Well, the answer is no, you can't. Number
Yeah.
two is that um, you're going to see divergences on divergences, in perpetuity.
Well, you have normalcy bias too. So like
Yeah.
whatever you're looking for to happen, you're looking, that's a confirmation of it and that sort of thing. That doesn't, that hurts you too.
The only thing that I found that actually works well is price action, which is what I
Yep.
what I teach with the fractal energy stuff. Is the price action. If you see a smaller time frame reverse and start throwing off lower
Hmm.
highs and lower lows, then that propagates to a larger time frame, like maybe a
Yep.
daily chart throwing off a lower high, lower low. Okay,
Yep.
uh-oh, we got some
Right.
problems here. And then you're really up feces tributary when you get a weekly reversal that
Hmm.
moves into a weekly lower high, lower low. So map
Well, and
those
that's
out.
back to the structural change
Yeah.
character of a market, right? Oh,
Oh,
let's see.
so would you buy puts as a hedge, but sell lower delta against them to recoup some of the hedge loss? So, yeah, I built a program I don't know, it must have been like 12 years ago. I called it the Hindenburg strategy. It was,
Hindenburg.
yeah, it was a cool name and everything like that. It was fun to use graphics like that because it looked like a big crash. But over time, I was not able to make it work. I was not able to finance the trade properly because what
Mm-hmm.
happens is you're you want to sell. So what I used to do was I would sell call spreads against it. Well, that worked when we had a reasonable market, but in the death of fiat currency, when they're willing to print anything, those call spreads became a liability. So here I
Yep.
am. I'm trying to be conservative here and set up some downside insurance. Meanwhile, I'm getting wrecked on the upside. So, uh, Rob, it's kind of the same thing here. If you sell lower delta against them, eventually when the crash comes, then all of a sudden those those short puts that you sold to finance these things all of a sudden become a liability and they will light right up. They will just like, they're going to swell like crazy. And then so all of a sudden you're like, well, why did I just do this? So
Mm-hmm.
unless you can tolerate being assigned to them, that's a whole other discussion. Maybe you can be assigned on them and then play the bounce back up. Uh, but that, few people are going to do it that way. Most people are looking at a hedge as like, hey, it's a way to make money while the market's going down.
Mm-hmm.
But it's never an easy proposition.
Hey Doc, before we jump off today, let's do a couple things. Number one, pull up the chart of Tesla. You and I were talking about that before this started, and then
Let's
also we'll do
let's
a quick rundown on crypto.
let's do that.
Um, so Tesla has been coiling up for a good while on the daily chart, and it may be beginning to have its breakout. So, um,
So does anybody spot a well-known pattern here? A well-known chart pattern here? Anybody? So this is your typical kind of like it's nothing's ever
mm,
going to be perfect with something like that unless it's gold. The GLD pattern was like literally
oh, it's
the
perfect. Yeah.
perfect pattern, but this is a rounded base into a handle. This is a cup with handle pattern, and the measured move target from this is basically the depth of the base. So you've got 225 up to 475. You got 250 delta here of price action. And so you append that onto there, you extrapolate that onto there. You're talking about what 750, 725 upside
Yep.
target for this thing, which is pretty healthy. Imagine writing a leaps contract into that and writing against that. That might be something that we. Um, I'm not going to say whether or not we're going to put that position on, but I think there's a good chance that Dave and I will put that position on this afternoon. Any other
Yeah,
questions
that's
from anybody here before we have to turn down the session?
yeah,
So it's
that's all.
always
It's also a bull flag on both those charts too. Is that handle set up as well? So
yeah,
something
and
to think about.
it's already past earnings, as Dave pointed out.
Yeah, it's already past earnings, so the risk is off the table, and it's up what 20 some points today. Um, check for everybody real quick. Show them crypto because you've been talking 130s, 140s, and so are we getting to a point where this thing's gonna really take off? Which would be the IBIT and EE or TA
Well, so something I'm watching here is
or
that we have a broadening pattern happening on Bitcoin. So
Mm-hmm.
we've had very gentle volatility as the equities market, so it's been just very gentle, and then all of a sudden it started to megaphone. We started to see the volatility tick up, and this is an early warning for what could be either a big move up, or it could be also a big move down. Now, chances are what it's going to be is it's going to be both. It's going to be a big move up and then followed by a big move down, because that's
Mm-hmm.
the volatility that is being amplified. And so this is where you get a quiet and trending market moving into sideways and volatile. So big moves are coming there. I actually put on, I don't do these very often, but I put on a strangle on the IBIT So we're going to watch for that and see if we can do something with that. But we're getting some good
You,
movement. Again, we had a market which was just in consolidation, and we had extreme fear in the crypto market.
yeah, and then Ether, Ether is getting ready to move. It looks like too. ETHA has been hugging
Yeah,
around that
this
30
looks
mark.
really good. Again,
Hmm.
notice the well-known pattern here, which is cup with handle. Um, same kind of thing, same kind of thing.
Yeah.
So, guys, there's the thing that we like about IBIT and the ETHA is that these are still really reasonable priced ETFs. So if you've gotten a shell shock with trying to get into some of these, like, I mean, goodness, we looked at like what O'Reilly,
Yeah.
like what happened to O'Reilly Auto Parts? Like, God, I remember this thing was like a $2 stock, and now it's split 10 to 1.
Yeah.
But and then AutoZone,
AutoZone's like ridiculous.
yeah, so it's like $3,800. I mean, it's like, so yeah, I guess people are learning to fix up their cars because nobody can afford it.
O'Reilly's a good one for leaps, though, if you like to do like
Yeah,
long-term leaps and sell for cash flow. O'Reilly's one of the top ones, and it has pulled back some off of that earnings, so
yeah.
that's one to look at.
All right, my friends. Well, can't wait to see what happens after this week. So not only do we have the Fed on Wednesday, but we have some major earnings on Wednesday and Thursday of this week. So
Yeah.
we will get movement, we will get volatility, and more than likely it's going to be being pulled to the upside. But we'll see. There's a limit to everything, so we'll see if we
Yeah.
can find that limit in the short term. Thanks, everybody. We will see you next Monday. See you next
Bye,
Monday.
guys. See you then.
All right. Adios.